I wish to talk to you today about inheritance tax, legacy planning using trusts. This is a complex area, so I do want you to get some tax advice or legal advice after you've watched this video. Please don't take this as the gospel, as in the be all and end all. You don't need to do any further research. I wish that was the case, but unfortunately it is a complex area. As I said, please get some advice. I want to talk to you about some of the issues and problems that we need to resolve. First of all, inflation. The government have frozen the IHT bands for inheritance tax and the residential nil rate band. You can possibly gift £500,000 worth of assets in your own personal name or £1 million as a couple to your loved ones without paying any inheritance tax. The problem is right now is that asset values, you would hope, are increasing in value, but your bands are not. And therefore, because of inflation alone, it's most likely that a lot of people will be paying inheritance tax even though they may not be planning for it. Pensions from 2027 is going to be added to your estate. So even if you thought, well, hey, I've got all these assets, plus I've got this pension, that sits outside my estate, right? Well, for now, yes. But if you pass away from April 2027, and let's hope you do, right? It's not that far away, that you may now be subject to inheritance tax because you didn't factor that in at all. And you won't be the first one. Misplaced insurance out of trusts. A lot of insurance products, life insurance, is written in the name of the person, so they become the beneficiary, which is a huge amount of mistake. I mean, 346 million, apparently, I was reading an article on, about avoidable inheritance tax because the life insurance was written in the personal name, not into trust. So straight away, misposting or misplacing investments can cost you an awful lot of money for inheritance tax. Not enough trusts are created due to cost and complexity. People hear about trusts and think, oh yeah, fantastic. Then they hear about what they are, what detail they go into, and then run away and do not implement them. Really what you need to do is work with a specialist like us or anyone else for that matter. As long as you're getting it done, that's all that matters to me. So make sure that you do work with a specialist to understand what trusts are, how they can help you, and then whether you should or should not implement them. Remarried and stepchildren, and this is a huge thing for me, is you might pass away, your remainder, wife, husband, civil partner, may then get remarried, and your assets that you want to give to your children may now be divided up between the new spouse and their children, which was never your intention. So again, one of the things you can do is create trust to prevent that, and we'll go into a bit more detail. There are some free resources you can use straight away. There is a free legacy ebook that you can download. I'm talking about a lot of things in that ebook, so feel free to download that using that QR code. There's also going to be a training course. There's already one there, but we will be adding to that. So keep an eye on that. QR code is there. Links will be in the description box below. So some of the IHT problems, now solutions. Let's have a look at what you can do. Use trust settled whole of life assurance, which is paid into trust. Really important, stops you paying inheritance tax on that money being paid to your family. Transfer existing life policies into trust. You may have to pay extra, by the way, to get this done, admittedly, but it won't be 40% of the life payments. Plan discretionary trust transfers mindfully. What I don't want you to do is just rush into trust because you think it's the right thing to do and then transfer so many assets and you end up paying a huge 10-year charge. That is not a good way at all. There are better vehicles to use, other trusts that you can benefit from. Point 4, make gifts directly or via trust. Again, different types of trust though, please note, to minimize IHT. Really important for you to understand that making gifts before you die will help you to reduce inheritance tax. It will also save potentially your residential nil rate ban on your home as well. Use the right trust, understand, then act. Really important. And again, I feel like I'm echoing this statement quite a lot, but it's so important. If you don't understand something, please don't walk away from it, because the benefits are there to be had. You just need more time and support. And we are here to make sure that you understand them, but don't feel overwhelmed by it. We can generally take the time to go through things properly and make sure that we'll hold your hand through that process. Get IHT tax advice. That's what we're here for. I mean, ultimately, I've done so many of these IHT calls now, saving people millions of pounds worth of inheritance tax. We can help you as well. It's not just inheritance tax though. It's the having the peace of mind you've done something about it. So that's really just as important as saving tax. It's having that sense of, phew, at least I've got this over and done with. And our calls are 90 minutes long, so it's quite nice, steady pace. We won't ever leave you behind. Hopefully that's been useful. My name is Simon Mishevich from Optimise Accountants. We are UK investment tax specialists. There's our website. Feel free to book a 10-minute discovery call using that QR code, and then also the QR code for the online will writing service as well. Make sure you get that done at the very least. See you again soon.